$130 billion. Gone one day, back the next. Cardano and Chainlink just pumped over 60% while Bitcoin barely moved. Whales are accumulating HBAR like it's Black Friday, retail traders are frozen in fear, and the altcoin season index just blinked to life for the first time in months. Either we're witnessing the birth of the next altcoin supercycle, or we're all about to get rug pulled by hope itself. Stay with me, because what happens in the next 72 hours could define your portfolio for the rest of 2025. Welcome back to the channel. If you're tired of watching Bitcoin hog all the spotlight while your altcoin bags collect dust, today's video is your vindication arc. We're breaking down the fastest altcoin recovery of the year, why whales are playing a completely different game than retail, and whether this bounce is real or just another bull trap designed to separate you from your money. If you find value in this analysis, smash that like button, subscribe if you haven't already, and turn on notifications so you don't miss what could be the most important crypto move of Q4. Now let's get into it. October 11th was a bloodbath. Not the fun kind where you buy the dip and tweet about it. The kind where $19.5 billion in leveraged positions got vaporized in hours. Exchanges lit up red. Twitter melted down. Within 24 hours, the altcoin market added back $130 billion in market cap. That's not a typo. According to data from CryptoRank and CoinMarketCap, we went from $1.48 trillion to $1.61 trillion between October 12th and 13th, an 8.8% rebound that caught almost everyone off guard. Cardano pumped 61%, Chainlink matched it, XRP surged nearly 50%, Dogecoin rallied 45%. Even tokens like Hyperliquid posted 19% gains while Bitcoin, the supposed king, barely scraped together a 6.3% recovery. Now here's where it gets interesting. The altcoin season index ticked up from 40 to 41. For those unfamiliar, this metric tracks whether capital is rotating from Bitcoin into altcoins. Anything above 75 signals full altcoin season. We're not there yet, not even close. But honestly, the direction matters more than the number right now. After months of Bitcoin dominance, we're finally seeing the first whispers of a rotation. The question isn't whether altcoins bounced. They clearly did. The question is whether this bounce has legs, or if we're all just falling for the world's most expensive head fake, because let's be honest, rebounds after massive crashes are tricky. They feel incredible in the moment. Your portfolio turns green, Twitter bulls come out of hibernation, suddenly everyone's a genius again, but emotions are not strategies, and hope is not a trading plan. We've seen this movie before. Sharp drop, sharp bounce, followed by weeks of slow bleeding that leaves you worse off than if you just stayed in stables. So before you YOLO into the next 10x gem someone shilled in your DMs, we need to separate signal from noise. According to the data, HBAR, HEDERA's native token, just flashed one of the clearest accumulation signals I've seen in months. Exchange inflows dropped from $4.43 million on October 11th to just $517,000 by October 13. That's an 88% collapse in selling pressure. Translation? Fewer people are dumping their bags on exchanges. Panic selling has stopped, the weak hands are out. But it gets better. The Chaikin Money Flow indicator, which tracks large wallet movements, turned strongly positive at around 0.10. This means whales, the big money players who actually move markets, are buying while retail is still shell-shocked. Even more telling? CMF started rising on October 7th before the crash, and it never dropped during the bloodbath. These whales didn't flinch. They didn't panic sell. They held through the storm and started accumulating on the way down. That's conviction. Meanwhile, the money flow index, which reflects retail participation, is trending lower. So, while whales are loading up, retail is just sitting on the sidelines, honestly, too scared to jump back in. Historically, this is exactly the setup that creates explosive moves. When smart money accumulates while the crowd is, paralyzed by fear. But let's not get ahead of ourselves here. Just because altcoins bounce doesn't mean we're entering altcoin season tomorrow. The altcoin season index is at 41, still firmly in Bitcoin dominance territory. For context, we need to break above 75 to officially declare altcoin season, and we're not even halfway there yet. What we're seeing now is early accumulation, not euphoria. And that's actually a good thing, because euphoria is where tops form, not bottoms. The technical picture on HBAR is particularly interesting right now. After 3 months of downtrend and a 20% decline, the price is showing bullish divergence on the RSI, one of the most reliable early reversal signals in technical analysis. Between June 22nd and October 10th, HBAR's price made a lower low, but the RSI made a higher low. If HBAR can break above 22 cents, a key resistance level that's capped multiple recovery attempts, we could see a push toward 25 cents, and if momentum holds, even 30 cents in the near term. But here's the reality check. If HBAR drops below 16 cents, the entire rebound thesis collapses, and we'd be looking at 14 cents as the next major support level where buyers would need to defend aggressively. This is the nature of early-stage recoveries. They're fragile. One bad headline, one unexpected macro shock, one whale deciding to dump, and the whole structure crumbles. That's why position sizing matters. That's why risk management isn't optional. You don't bet the farm on a potential reversal. You allocate intelligently, set stops, and let the market prove itself before adding more size. Now, let's talk about what happens next. If altcoins can hold these gains for another week and Bitcoin stabilizes above $110,000, we could see sustained accumulation into late October. That would set the stage for a proper altcoin rally heading into the fourth quarter. Historically one of the strongest periods for crypto. But if Bitcoin rolls over, if macroeconomic data comes in hotter than expected, if geopolitical tensions flare back up, all bets are off. Altcoins are high beta assets. They amplify Bitcoin's moves in both directions. The liquidation event on October 11th wiped out over-leveraged traders who thought the market would only go up. $19.5 billion in positions vanished because people were using too much margin, too much confidence, and not enough risk management. The market doesn't care about your thesis. It doesn't care about your conviction. It will liquidate you without hesitation if you're positioned wrong. The traders who survived that crash are the ones who sized appropriately, used stops, and didn't let greed override logic. So what's the smart play here? If you're bullish on altcoins, and the data certainly supports that case, this could be a prime accumulation zone. Dollar cost average into quality projects. Focus on tokens with strong fundamentals, active development, and institutional interest. Avoid the garbage tier meme coins that pump 500% one day and rug the next. Build positions slowly, don't chase pumps, and always have an exit plan. The market will give you plenty of opportunities to re-enter if this rally is real. FOMO kills more portfolios than bear markets ever will. High volatility cuts both ways. It creates opportunities, but it also creates landmines. Alright, that's the full breakdown. Altcoins just staged one of the fastest recoveries of the year, adding $130 billion in 24 hours after one of the most brutal liquidations we've seen. Whales are accumulating, retail is hesitant, and the technical setups are starting to look interesting. Whether this turns into a sustained rally or just another bull trap depends entirely on what Bitcoin does next and whether macro conditions remain stable. If you found this analysis helpful, do me a favor and hit that like button. It genuinely helps the channel grow and lets me know you want more content like this. Subscribe if you haven't already, and check out my other videos. Your support means everything, and I'll see you in the next one. Quick reminder, none of this is financial advice. Crypto is highly volatile and risky. Never invest more than you can afford to lose. Always do your own research, and never trade on emotion. Stay safe out there.